Today I'm going to give you a list of 7 stocks to buy in 2021. In fact, scrap that. I'll give you a list of 23 stocks to buy in 2021. Are you ready? Anytime you're buying a stock or investing in something, it's all about the degree of conviction you have. It's about how sure are you that the investment is going to play out the way you expect it to. Now, every quarter, the top analysts across the equity department at Deutsche Bank come together and present their best ideas for the next 12 months. They call it the conviction list. It's published every quarter, and the most recent was just published last week. And these are not just tech names that dominate the headlines. These are companies across a variety of sectors, from consumer goods to healthcare, financials, TMT. So today I'm going to give you 23 names that are contained in this report. You can find them below the video. But over the next few minutes, I'll talk about the 7 that I picked, that I really like and that I think you should pay attention to. When you talk about which sectors will do well in 2021, you have to talk about the airlines. And so pick number 1 on this list is United Airlines. They obviously suffered massively during COVID-19 because they have this huge exposure to corporate travel, to long-haul international travel. But they went through a lot of revenue innovation. They did extremely well, for example, in cargo. Their second quarter results show that the cargo business went up by 36% year over year, when Delta and American went down by 41%. So they completely reinvented this whole business model where they took advantage of the vast routes and those wide-body jets to pick up cargo all around the world. They were also the first in canceling the change fees, and so a lot of the flyers that fly with United suddenly move from the basic economy into regular economy, paying more for their tickets because they can easily change when they want to travel. And they were super aggressive when it comes to raising capital. They had multiple stock offerings, debt raises, and they recently issued the senior secured notes that are backed by the loyalty program. And so any notion of liquidity issues for United are completely gone. They have enough money to ride out COVID-19 and really emerge as a strong player because they are well positioned to the rebound in travel when it comes to corporate and long-haul international when borders start finally reopening. Now, pick number 2 here on the list is SkyWest. SkyWest is a regional airline in the US that flies those shorter routes, point-to-point routes on the smaller jets, and they fly for the 4 major airlines here. They fly for American, Delta, United, and Alaska under their brand name. SkyWest at this point, when all these major airlines fly only at 30-35% capacity, SkyWest flies at 60-65% capacity, even during COVID-19. And so whenever we start reopening fully again over the next 6 months, SkyWest, because they are really only a domestic player, they will benefit hugely in the rebound in travel, and they are well positioned to take advantage here. And both of these stocks are still very depressed. So that's 2 plays that I think really make sense for 2021. The second pick on the list is a company called Newmont, ticker NEM. Newmont is the largest gold producer in the world, an industry leader. And in fact, they're the only gold producer in the S&P 500. Now, Deutsche Bank has a target of $74 per share, which is about 20% higher from current levels. Now, Newmont is a company that has a well-seasoned management team, generates a lot of free cash flow with increasing dividend policy. They have mines in multiple jurisdictions, so they are extremely well diversified across North America, South America, Africa, and Australia. Now, the whole COVID-19 impact is largely behind them. They had about 5 mines that were shut down in late Q1, early Q2, but all of this is now behind them, and they are back to producing about 6 million ounces per year. So a company that really is in a sector that's seen a lot of interest lately, a lot of people looking for exposure to precious metals, to gold specifically. Newmont has about 90% of their revenue coming from gold and 10% coming from copper and silver. So all of these metals, obviously a lot of interest in a macro environment that is supportive for precious metals and gold specifically. So again, a stock that diversifies your portfolio, that has a good upside, is a leader in the industry, and is worth paying attention to. The next pick on the list is UPS, a $150 billion market cap with a target of $195 per share. Now, the Deutsche analyst thinks that UPS is at the beginning of a multi-year transformation, which is really benefiting from this huge surge in e-commerce, which will continue past COVID-19 because the habits of consumers change permanently. The company has a new CEO that really focuses on return on investment capital and pricing discipline. UPS really underperformed for many years because their network was behind FedEx. They spent a lot of money upgrading the network and investing in improvements. And the analyst at Deutsche Bank makes three following points. He talks about the e-commerce boom. Their average daily package volume was up 20% year on year in the previous quarter. Their operating income really was double of what the street expected. So when you look at the stock performance, you already see a lot of this translated in the stock price. The second point they make is the pricing strategy. Both UPS and FedEx really changed the way they price their routes because they want to eliminate these less profitable routes. And so you see a change in behavior of the shippers, and suddenly they look at UPS and FedEx as partners as opposed to just utility providers. And finally, a huge tailwind should come from the COVID-19 vaccine. All of these carriers, UPS, FedEx, and DHL, invest heavily in domestic and international networks of freezer farms where they can store and then transport the COVID-19 vaccine. And the expectation is there's going to be a lot of capacity constraint. And so once the vaccine shows up and UPS really becomes one of the carriers of choice to deliver the vaccine internationally and domestically, that's another potential tailwind in terms of increased revenue. So UPS has done really well over the last few months, but this is set to continue. And if you believe that the stock here is too expensive, obviously you can always sell some puts, and if you pick up the stock lower, then that's a great trade. The next pick on the list is PayPal. Now, PayPal is a $220 billion market cap at this point, and the Deutsche Bank analyst puts a target of $234 per share. Now, when you think about the size of the company here, compared to what it used to be, and you compare this to banks, this is a huge difference, right? 220 billion market cap is fast approaching JP Morgan at 300 billion and is way ahead of Goldman Sachs, for example, which is at 70 billion. So the fintech companies really, like PayPal, Square, and all the others, are really taking over here. They obviously keep seeing benefits of the huge surge in e-commerce. They keep rolling new products. They have strong partnerships that they keep adding new features and products to the product line. They have a really strong growth in 2020 in the new accounts. Their net new actives is up by 70 million new accounts, with Honey having an 84% increase year on year. So you see a huge amount of new accounts, but also the new clients have a lot more engagement with the company than previously historical new accounts, and that's by about a factor of 30%. And on top of that, you see that in terms of profitability, PayPal makes more money here because the new accounts tend to fund these payments by ACH payments, which are more profitable for PayPal as opposed to the more costly credit cards. So again, I think PayPal is an amazing pick. It's obviously also run up quite a lot, so you have to pick your levels. But this trend is set to continue because the habits, like we talked about with UPS and this whole e-commerce wave, is changing. So you want to pick these industries that really benefit from the trend here. The next pick on the list is T-Mobile. When you look at the universe of the carriers, wireless carriers in the US, really T-Mobile has the most aggressive and the best growth story right now. They have a multi-year free cash flow growth story that is really much better than what you see with the other carriers. The Deutsche Bank analyst has a target price of $150 per share, which is about 35% from current levels, and that's about 10 times EV/EBITDA multiple. Now, what does that really mean? Let's talk about two or three things when it comes to T-Mobile. They really outperform when it comes to grabbing market share and gaining in these consumer and business sectors. They also focus on less penetrated markets like premium family plans, suburban and smaller markets, military, first responders. And they also benefit from this position of the carrier that focuses on kind of the cheaper prepaid market that should benefit if the difficult economic environment in the US persists for months to come. Now, when it comes to 5G revenues are still a little bit far away and hard to predict. But when it comes to the position in which T-Mobile is, they are much better prepared for 5G than they were when it came to LTE. When LTE was coming, they were still trying to play catch up, and they're in a much better position for 5G now. And finally, the whole cost of the merger with Sprint. The cost was estimated to be about $15 billion over 3 years. And given what we have heard over the last few months in earnings calls and subsequent investor conferences, it looks like these costs could actually be lower. And so that's an additional tailwind for T-Mobile. So if you're going to pick a sector in wireless carriers, T-Mobile is really doing much better than all the others. And again, a decent upside here given where the stock is trading. And final pick on this list is the Zillow Group, a $24 billion market cap company with a target of $140 per share. Now, Zillow really benefited also from this whole change in consumer behavior that really we all went through because of COVID-19. The way we buy houses, the way we think about how and where we want to live. You know, the whole iBuying space is really becoming huge as opposed to the traditional way to buying and selling houses. The partner leads business for Zillow now includes buyer leads, not just the seller leads, so that's a huge portion of incremental revenue. And finally, Zillow Group now offers conforming mortgages, which is the biggest segment of the mortgages market. So that's another tailwind for the stock. So Zillow's, again, really going to benefit from the change in behaviors that really accelerated. This was already coming, right? But this really accelerated over the last 6 months and is going to keep going until middle of 2021. It's going to be a full year of behavior changes in terms of, you know, in how we buy and sell houses. So Zillow should really keep benefiting from that point of view. But look, I think this is it for the 7 stocks that I pick from this long and exhaustive list of 23 picks that Deutsche Bank highlights every quarter in this conviction list. The details again are below the video. You see the name of the stock and behind it the target for the share price that Deutsche Bank highlights. I hope you enjoyed this conversation. Give a like to this video if you enjoyed it. Subscribe to the channel for more content like this. But to close this, I think I want to just spend a minute on how to trade and how to be smart about how and when to invest. You know, don't just go and buy a stock because somebody online told you to buy something because they gave you a few points. Do your own research, do your own due diligence, pick your own levels, pick your own targets of where you think the stock should go based on your research, and also have a stop loss. Have a stop loss in mind. Don't just blindly invest into something that you read on Facebook or somebody gave you a silly advice and told you it's going to triple. You know, sound investing is a long-term marathon game. It's not a get-rich-quick scheme. So be smart about your money, be smart about how you manage, how you invest. All right, thanks for listening. I enjoyed this conversation and I'll see you in a few days again.